done this in the Dow. You can do it in the S&P 500. This is a backdated S&P 500. Really, S&P started up only in the 50s. Dow went to the 1870s. People have gone through, and I've gotten this data from Nick Laird. I haven't independently verified it. He's a, I think, since retired Australian gold fan, but also really worked at compiling this data. Basically, you take the S&P 500 or some derivation of what it could have been based on companies in the market before the 1950s, divided by the gold price at any given time, and you will get how many ounces, or a ratio in ounces, it takes to buy the S&P. You can do this with the Dow as well. You get the same effect. You should have immediate attention drawn here. This is a .com boom and bust. So what was happening here was stocks were at a relative all-time high and gold was at a relative all-time low. So a great move for gold bugs, or for anybody really. If you had stocks before the peak, sell the stocks, buy gold. Conversely, if you're at really low points here, like when gold went to $850 for 2 seconds in January of 1980, if you had gold, sell it and buy stocks. Doesn't necessarily tell you anything about the dollar in this chart. You do use dollars to triangulate, but this is just purely the stock market index divided by the gold price, and then you will get a multiple, which is ounces of gold to buy 1 unit of the index. So sell stocks, buy gold, sell gold, buy stocks when it's low. Are we going to have such a big peak now since gold itself is ripping, stock market's ripping? It's very hard to tell, but it's an interesting metric. Here you see this is the eve of the Great Depression. Sell stocks, buy gold. Really just to describe the ounces as well. Like right now, today, it would take you nearly 2 ounces of gold. All right, so it's nearly, whatever it is, $7,000. 666. What is the gold price right now? I don't even know, to be honest. Yeah, 667. So $6,700 roughly to give you 1 share of the S&P. And then if you go all the way back here, you know, rounds almost to zero, but it's 0.1, basically 0.1 ounces of gold. So very, very cheap. So the trajectory is obviously up. For a little bit of analysis here, it's not that exciting, but this is an evolving linear regression, which means basically, you know, I don't have a full straight line. I'm just sort of seeing how the tangent looks each month. This thing is trending higher, obviously. And if you look actually where we are right now, we're right on trend, interestingly. If one had the foresight to understand this chart and, you know, was heavily loaded in gold in 1980, sold all their gold, bought stocks, and then did the reverse in 2000, that would be probably, you know, you could have been, I'm sure that trade would have done just as well as Warren Buffett ever did. Timing these bottoms is, of course, very difficult. And it takes a long time, right? Like, maybe you would have thought the bottom was here in 1974. You entered that trade. Whoop. You had to wait 6 more years. Sold your gold too early and then bought later here. You know, you never know. But this is just the general idea.